Investors and traders, welcome to the channel Market Chart Pattern. In this video segment, we are going to go through the key US banking stocks and ETFs as we always do for this video segment, which we have been following since the banking crisis broke out in the early part of March this year, March 2023. This video is for educational purposes only and it is not a financial advice. For new subscribers, please welcome to the channel, and for the subscribers who have already subscribed to the channel, welcome back. What we are looking at is the daily chart of the Spider S&P Regional Banking ETF, and our viewers will know that we were actually looking for key support level for this ETF, and in fact what we were looking for was a support coming right around the $47 per share level, but this was also happening around the time when this SVB crisis was really in its full force out there, and it actually price went lower and it had been just consolidating. We had then drawn this wedge formation here, and we had also identified that actually we were moving into this kind of a support zone because of the 78.6% Fibonacci retracement coming here, and on the upper side we had the 61.8% Fibonacci retracement. What has happened last week? There has been a push lower, and in fact the price moved lower than the 78.6% Fibonacci retracement. And last Friday the market price snapped back up, and the pattern formation could have been called a abandoned baby bottom from a candle sticks perspective. However, today's close is not a very good close. There was a gap up in the at the open, but the price actually closed lower, and there wasn't a follow through. We will be watching this because really carefully, because the 78.6% Fibonacci retracement should provide some support, and there is a possibility that we could see some consolidation taking place here, and price actually tries to move higher, breaking below this low. Let me actually draw this right here. Then we are looking at then price going and testing the lows of 2730 and maybe even lower. But for now, let's see over the next few trading days how the market is going to behave at this 78.6% Fibonacci retracement. It just seems to be consolidating around this region. Let's take a look at XLF. This is the daily chart of the Spider Select Sector Fund financials. Here, as we had mentioned in the previous video done for the key US banking stocks, the bearish symmetry is still in play. And what is this bearish symmetry? So one of the things the viewers will know, our subscribers, regular viewers, that over here in this channel, Market Chart Pattern, one of the key things we look at is the market symmetry. So markets repeat again and again and over and again, and market symmetry. So if you look at, this was a correction which had this much amplitude, and this is where it terminated. So in this leg moving forward, this is the equal amount of rally we are looking at. If the market is strong enough, then it should be able to break higher, indicating that the structure of the market is actually changing. Until and unless there is a really good convincing close of the market breaking this market symmetry above the 61.8% Fibonacci retracement, actually the market remains under pressure. However, what we have seen is, as we also had a look at the regional banking stocks ETF KRE last week, there was a push lower. In fact, I can already see there's a little bit of a pattern formation of ABCD where this leg had actually extended the CD leg, extended the AB leg. Here we go. There we go here. So that's the 1.618. And on the retracement side, here we go. Let's take a look. Looks like it's a 78.6% retracement. And there we go. I'm just gonna remove this for to make it a little bit easy to see. And we get 78.6% Fibonacci retracement coming nearby. So it has a confluence of two ratios coming together. And let me just quickly do something. Triangle. Here we go. Here and quickly here. So guys, I do this live with you guys. It's one of the things I like to do when I'm making these videos. So now what it means is that as long as this level is held, which is the $31 roughly, let me highlight it like this. There we go, 31.18 on a closing basis. What it might be doing is an ABCD formation to the upside. So what it could be doing is, here we go, taking us right to this 61.8% Fibonacci retracement, bearish symmetry, and that is going to be a pretty strong resistance level if this market is actually going to rally. So let me actually write it down. Here we go. Let me make it smaller. Okay, there we go. And just for illustration purpose, let me actually try to make it a little bit easier for us to see. So that's gonna be the ABCD formation. Let me write it here. So that's gonna be A, and then B, C, and D if the market is in fact going to move in this ABCD formation, right, like this. So the key thing is the C point here, which is around $31.18. That, as long as it is held, the chances are that this ABCD formation is in which this price is moving and will have a strong resistance here. And if the price actually closes below these levels here, then you guys know we have a bigger ABCD formation, which would actually take this down to this is the 61.8% Fibonacci retracement coming around $26.81, and the D point is a little bit lower, around 25.25. That also remains a possibility. If this whole structure begins to collapse, then it means that the CD leg is in play because the B point has been broken. Okay, so let's look at some individual stocks. Let's start with Goldman Sachs. So here the Goldman Sachs has been rallying. We identified this rally in our previous videos. You can go and have a look. One of the key things from 61.8% Fibonacci retracement, what is key is just like the XLF, if this low is not broken, then we are looking at ABCD formation, which could actually take it higher. And then we'll have to look at this entire retracement from here. The good thing will be that the stock is actually breaking the bearish symmetry, which will be a good thing, which means that there is going to be strength coming in the stock. And Goldman Sachs is a key component in Dow Jones index, which could actually see strength downside if this low is broken. Then we have this ABCD formation in highlighted in blue, which could actually see the stock go down to $242 per share level, but it's all dependent upon this structure around here, whether it's broken to the downside to tell us that in fact it's moving in a CD structure lower. But for now, this 61.8% Fibonacci retracement has held And although today's price action is a bearish, we should also look at next few coming days how the price is going to trade around here, and we'll get a lot more clues. Going below this $320 per share level, we could see price moving lower. Let's take a look at now JP Morgan. So JP Morgan has actually been trading in a range. It had good earnings come out. We have seen a jump in the stock price. However, it's a trading range. Upper boundary is 61.8% Fibonacci retracement. The key is this 38.2% retracement from this swing. If the market will begin to close lower from here, then the price is going to move. Possibly the next support will be around $117 per share level. Breaking this down, could see a price going much lower, perhaps even testing the March 2020 bottom here. Let's take a look at Citigroup. Citigroup again, it's got this possible abandoned baby bottom formation. I'm not too convinced about this because of the no follow through here. Strong resistance coming in from this parent formation. Most likely this rally, it's going to find resistance as it moves higher. We are just waiting and watching for the price action to give us more clue what it's going to do. Most likely the key thing is that this $44 per share level is held. Otherwise, we could have lower price coming in. Let's take a look at the Morgan Stanley. So the Morgan Stanley stock has been actually one of the better performer stocks in terms of the price action that we see from a structural perspective. Look at this price moving in this channel. We have 1, 2, 3 points here where it had found support from this trend line, and then last week it came and tested this and seems to have formed some sort of a double bottom, although it's a bearish candle. On the top side, we had identified this level here that it was going to find some resistance and more resistance up here. What is key is that it's just really moving or hovering around the 61.8% Fibonacci retracement, closing below these levels of 81.50, for example. We have next support coming in around 78.15, which is the Fibonacci 78.6% Fibonacci retracement, but that would have clearly broken this trendline support. And in fact, what it could mean is that the market might actually be moving in this ABCD formation, possibly if that low is broken, which could in fact see the stock here we go and test the July 2022 bottom, and we could have further targets, but for now we are just gonna wait and watch the price action, whether it's going to break these levels that we have identified as possible support levels. It's also possible the price actually go and if the stock begins to move down, test 21st December 2020, excuse me, 21st December 2020 gap higher. It's possible price might actually be in fact going there. Wells Fargo is the next one that we like to take a look at. So Wells Fargo is a banking stock which seems to have issues of its own because this price has been moving down for quite a long time from the beginning of February 2022. We had identified apparent information here. I'm not going to go into too much detail of this. You can find an older video done on it which explains that. And the price has been just moving lower here. One of the key things that we look at is this bearish symmetry. So look, this is a perfect example of the bearish symmetry that we like to talk at this channel. And what we have seen is that price has, anytime the price has risen about this much, it hasn't gone much further. Here, went a little bit above, nothing too much, in terms of a bigger rally after this. And it has fallen, then it has rallied about the same magnitude, formed a double top, and then moved lower, rallied the same magnitude, formed a double top formation here again, and then moved much lower, found support from this 61.8% Fibonacci retracement. And here what the stock might actually be doing is it's just eyeballing its 78.6% Fibonacci retracement. Let's actually draw and check here. There we go, exactly, it's that level. And if let's say because we are also seeing similar kind of patterns in other banking stocks, let's say if it is able to find support and it begins to rally, then we could have this ABCD formation. There we go. And what it's going to do is it's going to take us right to this bearish symmetry level at the 61.8% Fibonacci retracement of this entire swing, and that's going to be a pretty strong resistance level if in fact the price is going to do what this pattern might suggest, unless this if this low is not broken. So if that's the case, let me actually put a question mark here, and I'm gonna do strong resistance. There we go. Okay, so this is what we are watching, and if this low is taken out, then the bigger ABCD pattern that we are looking at could actually see the stock go to 29.10, which is 78.6% Fibonacci retracement, and even lower to $26 per share level. That's also possible. So guys, this is what we are watching in the key US banking stocks. And let me actually write this here. KRE. This is the regional banking ETF. Here we go. So apologies guys for the video being quite long. If you like the way we do our analysis, please do subscribe to the channel. If you like the video, find it of educational value, please do like the video. Thank you very much. Good luck and good trading.